Weaker jobs data raises possibility of earlier Fed rate cut. In recent news, weaker than expected ADP payrolls data has added to evidence of a cooling labor market in the United States. This development has led to speculation that the Federal Reserve may consider cutting interest rates sooner than anticipated. The market has already priced in a 55% probability of a rate cut as early as March next year. This video will delve into the details of the jobs data, its implications for the Federal Reserve's decision-making, and the market's response. Weaker ADP payrolls and job openings. According to the ADP National Employment Report, private payrolls from the U.S. rose by 103,000 in November. This figure is lower than the 113,000 recorded in October and falls significantly short of the forecasted 130,000. The decline in job growth suggests a cooling labor market, which could prompt the Federal Reserve to take action. Furthermore, the U.S. Bureau of Labor Statistics reported that job openings, as measured by the Job Openings and Labor Turnover Survey, JOLTS, fell to 8.7 million in October. This figure not only missed estimates but also represents the lowest level since March 2021. The declining job openings have resulted in a ratio of 1.3 job openings to every available worker, indicating a tightening labor market. Implications for Federal Reserve policy. The weakening jobs data has raised concerns about the impact of the Federal Reserve's aggressive rate hikes on demand and hiring requirements. A cooler jobs market supports the narrative that the central bank may consider cutting interest rates earlier next year. The market has already factored in the possibility of a rate cut, which has contributed to the positive performance of stocks in November and the continued support for equities in December, as Treasury yields decline. The Federal Reserve's interest rate decision. The Federal Reserve's interest rate decision is scheduled for next week, and the market is currently pricing in the expectation that rates will remain unchanged. However, investors are eager for clarity on when policymakers might consider cutting rates. The central bank will likely want to ensure that inflation is genuinely under control before loosening its monetary policy. As a result, market participants are closely analyzing economic data for any indications of the Fed's future moves. Conclusion. The weaker than expected ADP payrolls and declining job openings in the U.S. have raised the possibility of the Federal Reserve cutting interest rates earlier than anticipated. The cooling labor market, coupled with the Fed's aggressive rate hikes, has prompted speculation about a potential rate cut as early as March next year. While the market is eagerly awaiting the central bank's interest rate decision, it remains uncertain when policymakers will consider implementing a rate cut. Investors will continue to monitor economic data for clues about the Fed's future actions.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.